In the recent week, we have seen two profit bookings. The first profit booking was seen on Monday, 23rd of February, and the second profit booking was seen on Thursday, 26th of February. However, the most interesting thing is that there were the traps on 20th of February, Friday, and then on 25th of February, Wednesday. And how did we know that there is a trap? This was through the level 687X on Friday on 20th of February. And the same I have mentioned and repeated in the previous S&P 500 weekly technical analysis. And then the next trap was set on 25th of February in the S&P 500. And why that was a trap? However, S&P 500 came into the open equal to low condition, and even in my pre-market analysis on February 25th, I mentioned that such a condition, open equal to low, and then immediately a bullish movement, means confirmed manipulation. Now, because of these two instances of profit booking on 23rd of February and 26th of February, the S&P 500 has come under pressure and is now forming a bearish slip. And what does the formation of the bearish slip indicates? It indicates fall or the continuation of the fall. And to make the matter worse, the Dow Jones has finally, after almost 8 or 9 months, it has given a confirmed bearishness through MACD and the stochastic RSI. And in my final update on Friday, I mentioned that if these two conditions are fulfilled in the S&P 500 and the Dow Jones, this means that the entire markets and the technicals have turned bearish, and there will be bearish momentum. Even if there comes a bullish movement, then also there will be the fall. And then to make the matter worse, now the war in the Middle East. I will explain the impact of war on the S&P 500, Dow Jones, Nasdaq, and the global stock markets, and the gold and the Bitcoin in detail in this S&P 500 weekly technical analysis. So overall, the thing is that now if all goes well, and once there comes some specific conditions in terms of the levels, and S&P 500 comes down and start to trade below the levels, then highly likely first the Nasdaq will enter into the correction, okay, and then the S&P 500 will follow the correction. And what will be the target in the bearish side in the short term? Anywhere between 6,000 to 6,500 in the S&P 500. What about 7,000? Are there any chances? Yes, there are very limited chances. So all of this, the bearish cycle, correction, okay, impact of this, and then the movement, bearish slip, bullish side, limited movement in the S&P 500, Dow Jones, and Nasdaq. All of that I'm going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of March 2nd. Means from March 2nd, which is Monday, to March 6th, that will be Friday. And guys, this S&P 500 technical analysis is very, very important. Why? Because I'm going to cover the impact of war and the interest rates along with the numbers and the levels in S&P 500, Dow Jones, and Nasdaq. This is why it is recommended that you should watch this S&P 500 technical analysis, the technical section and the probable movement section, in order to understand the short-term and the long-term impact. Okay, and if you are new to my channel, then let me tell you that I have divided this S&P 500 technical analysis in two parts. First one is the technical part. In the technical part, I will cover the technical indicators and percentage bullish, percentage bearish movement, the heavy change in the Dow Jones, the MACD and the stochastic RSI of the Dow Jones, and how that is going to trigger a heavy fall or a massive fall in the entire market. So I will cover the weekly chart and the daily chart. Then the second part of the agenda will be the probable movement. Probable movement means what will be the conditions for the bullish side movement? What will be the conditions for the bearish side movement? What will be the levels, zones, resistance, etc., etc. So all of these, the bullish, bearish conditions, levels, zones, I will discuss in the probable movement section. Now guys, I am going to start with the technical part. But guys, before I do that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, first I'm going to cover the technical part, and I have divided technical part into two parts, weekly chart and the daily chart. So first I will discuss the weekly chart. Weekly chart means one candle represents 1 week. Okay, and also weekly chart means the long term picture for a month, 2 months, for a quarter or so. Okay, daily chart is the short term picture, okay, for 2 days, for a week or maximum. That's it. Okay, so now let's first discuss the weekly candle of the S&P 500. So it's a bearish candle, weekly bearish candle. Okay, as such this should trigger bearishness. However, the good thing about the candle is that it has managed to close above the moving average on the weekly chart, and there are no two consecutive closings below the moving average on the weekly chart. So this is indicating that indeed there is a pressure. Indeed there is a pressure on the stock market, on the S&P 500, but still the S&P 500 is in a condition to try to sustain. I'm not saying that 100% it will be able to sustain. No, it is in a condition to try to sustain. Okay, so as such this is indicating an initial or intraday bearish movement on Monday. This condition is indicating, okay, a gap down cannot be confirmed through the condition. Okay, but an initial or intraday bearish movement on Monday. Now let's get the confirmation through the Dow Jones. This is a chart of the Dow Jones, last weekly candle of the Dow Jones, very heavy bearish candle. However, again the closing of the candle was above the moving average, so that's a relief. Again, a gap down open is not confirmed, but an initial or intraday bearish movement on Monday will be there. Okay, so these two conditions in the S&P 500 and Dow Jones. Nasdaq I am going to discuss only because it is changing, or it is going to impact the movement of the S&P 500 and Dow Jones. Okay, if you notice, Nasdaq is holding, okay, within the cluster of the moving averages. So, but again, this is trading under pressure. But because of this closing and the shape of the candle, it is indicating an initial or intraday bearish movement on Monday. Okay, so now that we have covered the S&P 500, Dow Jones, and Nasdaq on the weekly chart, so one thing is clear, that through the candles, that there will be an initial or intraday bearish movement on Monday, right? Now there are chances, because of the event, the war in the Middle East. Okay, there are chances for a gap down open, so that I will discuss in the next part, the probable movement section. Okay, but as of now, technically an initial or intraday bearish movement is there, or will be there. Now let's analyze the technical indicators for each of these. Okay, the most important one is in the Dow Jones, but first the S&P 500. Technically, the S&P 500 on the weekly chart is bullish through the Bollinger Bands, moving averages, and the Ichimoku cloud. And also the S&P 500, okay, no, not also, but it is still bearish through the MACD and the stochastic RSI, okay, and no saturation or nothing. Now the good thing is that even though S&P 500 is bullish through these technical indicators, but the most important part is the bearish MACD and the bearish stochastic RSI on the weekly chart. What does that mean? This means momentum is bearish. Means even if the market, even if the S&P 500 try to move up, it will be brought down again and again. There will be surprise fall, there will be sharp fall, there will be profit booking because of the bearish momentum. Okay, so in this manner the S&P 500 is 60% bullish on the weekly chart. Now comes the Dow Jones. Okay, Dow Jones is also bullish through the Bollinger Bands, moving averages, and the Ichimoku cloud on the weekly chart. Okay, this is what we know, and last time also this was the same thing. But what was not there the last time? Okay, last time there was no confirmation of a bearish MACD on the weekly chart. This was something that we were waiting for last 9 or 10 months. Last time we have seen this was May 2025. Okay, since then it's been 9 months. Okay, so finally after 9 months there is a confirmed bearish crossover. Okay, the same bearish crossover is in the stochastic RSI. Now what did I mention in the previous S&P 500 technical analysis? That only a heavy bullish candle means 2% or more than 2% bullish movement, means above 50,000, okay, can help the Dow Jones. Not just 50,000 but 50,500 can help the Dow Jones to avoid the bearish condition which is seen through the MACD. Means the MACD will not give a bearish crossover, it will form a bullish slip, okay, and will indicate the continuation of the bullish movement. However, finally there is a confirmed bearish crossover. Now the MACD is bearish, stochastic RSI is bearish for the Dow Jones on the weekly chart. Bearish momentum. This was something that was not there in the last week. Okay, but now exactly the same condition is there in the S&P 500 and exactly the same condition is there in the Dow Jones. Means that there is heavy pressure. Bearish momentum is now there, okay, in the US stock market, in the entire stock market. Now we'll get some more confirmation through Nasdaq. Okay, Nasdaq is more bearish because Nasdaq is bearish through the Bollinger Bands on the weekly chart. Okay, it is neutral through the moving averages but is bullish through the Ichimoku cloud on the weekly chart. Furthermore, there is confirmed bearishness through the MACD. Okay, there is limited bullishness. There is a small bullish crossover in the stochastic RSI. Okay, this is something that is going to help the Nasdaq. Actually, it is not going to help the Nasdaq. Okay, so see, in terms of the technicals, the Nasdaq will be considered as neutral on the weekly chart. Okay, neutral and bearish. Why? Because the impact of the bearish MACD and the stochastic RSI of the Dow Jones and the S&P 500 will be heavily felt on the Nasdaq. Okay, now Nasdaq is not in a condition to support the bullishness in the S&P 500 and Dow Jones. This means that if all goes well, then as early as on Monday, okay, we will see, or we can see again a bearish crossover in the stochastic RSI of the Nasdaq. Okay, once that happens, then all of these three indices will align in the same direction, bearish direction. Okay, once, okay, that is there, and not once, but we are not going to wait for the Nasdaq because now there is a confirmation in the Dow Jones and the S&P 500. Okay, so there will be pressure and there will be fall. Okay, this is what we know. So in this manner, the S&P 500 and the Dow Jones are 60% bullish. Nasdaq is neutral. All of this indicates again the same thing. I'm repeating the same. Okay, the change in the entire US stock market after the bullish rally, we are expecting a change in the entire US stock market, not just in the US stock market but also in the global stock markets. Okay, the European market. Okay, the European market, the index was SX5E. Okay, so it was trading at all-time high, and now this index has also started to show the weakness, the pressure, because SX5E, it was heavily saturated and overbought on the longer term charts. Okay, and this was an early indicator to the US stock market. That is why I mentioned that now we are expecting a change in the US stock market, in the Dow Jones and so, and we have seen that the change. Okay, now we will get more confirmation through the daily chart that how soon we are going to see the change. That is why again in my final update, it was not just the final update on Friday but also in the other updates. Okay, every other day I mentioned that now we are seeing a change in the market, the pressure. Okay, this change will not be limited to one index but will be felt across the US stock market in all of the indices. Okay, and everything. Okay, and that the Dow Jones is now after 9 months, okay, it is giving that the bearish combination, the bearish momentum will be there. Now guys, in order to get more confirmation on the bearish and the bullish movement, let's move on to the daily chart. So guys, this is the daily chart of the S&P 500. Daily chart means one candle represents one day, not 1 week or 1 hour. Okay. Now, before I discuss the daily chart, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, let's first discuss the candle. Candle of the S&P 500, a good intraday bullish retrace. Okay, but there is a problem. What is the problem? The problem is the bearish slip through the technicals. Other than that, the closing of the S&P 500 itself. What about the closing? Again, the same. If the SP 500 closes below 688X, then this will form and confirms a bearish slip. And even if other conditions are not or might not be indicating a gap down open or fall, but this bearish slip itself is more than enough to trigger a gap down open and the fall. And if this is supported by the Dow Jones is bearish closing condition, then we will see a good fall on Monday, and the Dow Jones supported the bearish condition. This means that the bearish slip condition and the failure to close above my calculated level at 688x. Okay, we are expecting a fall. Fall in the sense a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. However, there is a catch. The catch is that because of this intraday bullish movement and the shape of the candle itself, which is supporting some bullishness, we will see an intraday bullish recovery. Now, how much bullish recovery will be there, percentage wise, to what level it will be there, that I will discuss in the next part, that is the probable movement section. Okay, so this is clear. Now comes the last daily candle of the Dow Jones. Okay, and this is going to make the matter worse. Now, why it is going to make the matter worse? Look, Dow Jones was trading in the open equal to high condition, and on Friday in the first update, okay, and before that in the comments, then in the midday update to my Patreon community members, I've clearly mentioned that the Dow Jones is trading in the open equal to high condition and is not expected to come out of the open equal to high condition. This means that for the entire day, the entire US stock market will trade and remain under pressure, and the SP 500 will not be able to recover significantly. It will have to struggle. And the same will be seen in the Nasdaq, and whatever bullishness is there in the S&P 500 and Dow Jones, and Nasdaq is not reliable because of this condition in the Dow Jones. Furthermore, not just the open equal to high condition, but Dow Jones also has closed below my calculated level. So in this manner, the Dow Jones is also indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Now comes the Nasdaq. Now surprisingly, Nasdaq is actually, the candle is a kind of candle that is indicating, it is not indicating a gap down open. Okay, rather it is indicating an initial or intraday bearish movement. Okay, but this intraday or initial movement will be or shall be limited. Okay, and also allows intraday recovery along with the S&P 500, but that is not the case in the Dow Jones. Okay, now because here the condition of the S&P 500 and Dow Jones will prevail, just like on the weekly chart. Okay, so all of these are conditions on the daily chart and the weekly chart through the candles indicate that on Monday, okay, there may or may not be a gap down open. Okay, most likely it should, because of the conditions that I mentioned repeatedly I mentioned, and all of these technical conditions were fulfilled. And if some other conditions are fulfilled, then we will see open equal to high condition in the entire market. If not, then surprisingly we can see open equal to low condition. Okay, so you might be thinking that there will be heavy fall. Rather, there might come a heavy gap down open initial. Okay, and it will start to move up and forms this the condition. Okay. Well, all of these conditions, okay, I'll discuss in the next part, the probable movement. So on Monday, there will be initial or intraday bearish movement. Okay. And if all goes well, then also there will be a gap down open on Monday through this the condition. Now, let's verify and validate through the technicals. Okay. Because if technicals allow some room in the bull side, okay, then there may come a good recovery, good intraday recovery. However, the problem is in the S&P 500. So in terms of the technical, S&P 500 is bearish through the moving averages, bearish through the Bollinger Bands on the daily chart, but is bullish through the Ichimoku cloud on the daily chart. And the S&P 500 is, it is still holding somewhat bullish through the MACD on the daily chart and is bearish through the stochastic RSI. Now the problem with this, the MACD of the S&P 500 on the daily chart, is that only and only if there comes a green candle, a good green candle, not a green candle, but a good green candle on Monday, then only the bullish MACD will continue. If there comes a limited green candle or any kind of red candle, then there will be a confirmed bearish crossover. Okay, and once that happens, then stochastic RSI is already bearish. Okay, then what? Then there will be the confirmed bearish momentum on the daily chart, because the weekly chart is already aligned bearish momentum through the MACD and the stochastic RSI, and once the same confirmation comes through the daily chart, okay, then it doesn't matter what is happening in the market, what is happening in the economy, the war or what, okay, automatically by default it will come down, and it will come down heavily. And these the profit bookings that we are seeing here, or we have seen here, 23rd of February and the 26th of February. These kind of profit bookings will happen and will keep on happening, and we can see, or we can expect the traps in the market, okay, with these the profit booking. So first there will be the trap, then the profit booking will be there, okay, and it is easy to identify the trap. It's not a big deal, and it was not just about these traps, but even in my previous S&P 500 weekly technical analysis, I have specified and indicated a condition for the trap. Once that is gone, then there will be fall no matter what. So overall, considering all of these the conditions, bullish, bearish, MACD and all, S&P 500 is 70% bearish on the daily chart. Now comes the Dow Jones. Okay, Dow Jones is the only index which is holding, but is not expected to hold, okay, any longer. Now, because you can see the moving averages, as of now, Dow Jones is neutral through the moving averages, but is bearish through the Bollinger Bands on the daily chart, but is bullish through the Ichimoku cloud on the daily chart, and bearish, MACD is bearish of the Dow Jones on the daily chart. Stochastic RSI is holding bullish, okay. So all of this bullish, bearish, okay, this is indicating that the Dow Jones is what? The Dow Jones is neutral on the daily chart. Finally, after many weeks, months, we are seeing this the condition again. At least it is neutral. Last time that was November when it changed to bullish, but now at least it is neutral. Okay. Nasdaq, nothing much in the Nasdaq. Nasdaq is by default it is bearish through the moving averages, Bollinger Bands, and is neutral through the Ichimoku cloud, and is bullish through the MACD, bearish through the stochastic RSI. So Nasdaq is also 70 or 75% bearish, 75% bearish on the daily chart. There is no change in the Nasdaq. Okay, why I am discussing the Nasdaq again? Okay, because this is going to trigger heavy fall in the entire market. Okay, this will help. Means even if the Dow Jones hesitate, even if the S&P 500 hesitate, okay, to come down, then Nasdaq will give that the motivation to fall. At the same time, okay, if there comes the special conditions like candles, okay, or the numbers levels, in that case only the market will be able to sustain. Okay, but remember one thing, the levels, okay, the levels will simply supersede the technicals and the candles. Okay, see, for example, okay, if you notice, on Wednesday 25th of February, S&P 500 moved up, okay, and it came into the open equal to low condition. Okay, in my pre-market analysis, okay, I mentioned this thing exactly, clearly the same thing, that only and only if S&P 500 comes into open equal to low condition and immediately after open it moves up, that it's a confirmed manipulated event, okay, it will be unsustainable. Okay, and then what we have seen the next day, a heavy profit booking. Now this bullish movement on Wednesday itself was not enough to trigger the profit booking. Okay, so in that case there came the zone, 691x zone, because once the S&P 500 loses the 691x and there comes a breach, what? Just a breach of the open price of 6915.15, then we will see heavy intraday fall. Okay, heavy intraday fall in a manner that any fall will be handled by the 685x. And this was that the pre-market analysis. Okay, here I mentioned the breach of 6915.15, and then we will see the fall, okay, maximum up to the 685x. And this is where it will be handled. However, because of the conditions, it will retrace back to the 687x level. This is why I am saying that even if somehow the S&P 500, Dow Jones and Nasdaq manages to recover, but during the recovery, it fails at my levels or zones, and then further my levels or zones are supported by the technicals. Okay, in this case, the bearish slip is supporting my levels number. So there is a double confirmation for the fall. That is why I'm saying, even though there was some bullishness, but it's still a gap down open or irrespective of any open and initial or intraday bearish movement on Monday. And if all goes well in the short term, then we will see the continuation of the short term bearish cycle that will then convert into the correction. But guys, whatever is going to happen or whatever will happen, I will keep you posted and I will keep you updated through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. I give the pre-market analysis before the open of the stock market. I give the first update after 1 hour. Then I give the midday update after 3 hours. Then I give the final update 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of what is happening and what is going to happen next. What are the levels? What are the numbers? Okay, whether it will go bullish or bearish, etc., etc. And guys, that's not all. Because I also give the opportunities in the premium stocks of the US stock market 30 to 50. And that's not all. Because I also give the mid-week update, and this is the video technical analysis generally given mid of the week, means every Wednesday, and I discuss all of the conditions with numbers, zones, precise levels, everything in detail. So guys, in order to get all of these daily precise updates and stock market opportunities and the midweek update video technical analysis, you can follow the link I have given in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button which says membership options. And when you click on this button which says membership options, then you will see that there are these 3 levels, level 1, level 2 and level 3. In level 1, you will be getting all midweek update video technical analysis and daily SP500 precise updates, movement, momentum, levels, zones. Okay. Level 2, you will be getting by default whatever is there in the level 1 along with the premium opportunities 30 to 50. Premium opportunities in the stocks and the ETFs, etc. And level 3 is the premium level. Whatever you are going to get in level 1 and level 2, by default you will get in level 3. You will be getting all midweek update videos, daily SP500 updates, analysis, movement, levels, zones, premium opportunities 30 to 50, and also a Zoom video meeting of 2 hours. And in this, the Zoom video meeting, I will teach you one strategy of high accuracy, one premium hack of very high accuracy, and one premium indicator in very detail with very high accuracy. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, and the stock market opportunities and the midweek update. And they are very well aware of what is happening and what is going to happen in the US stock market on the daily basis. So guys, if you also want to get the same, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the second part of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement, means what is going to happen in the S&P 500, Dow Jones, and in the Nasdaq, and in a manner to the entire US stock market in the coming week. The week of March 2nd, means from March 2nd, which is Monday, to March 6th, that will be Friday. Now, first come first, the event. Only on Friday, a technical event will be there, non-farm payrolls, and the unemployment data will be released on Friday, okay, on 6th of March. Okay, this will heavily influence the movement of the stock market. Okay, not just the US stock market, but the global stock markets. So, let's first start with the technicals. Okay, and then I will tell you about the impact of the war and the gold and the Bitcoin, etc. So in terms of the technicals, what we know is that S&P 500 is 60% bullish on the weekly chart. Dow Jones is 60% bullish on the weekly chart. Okay, the MACD and the stochastic RSI on the weekly chart of the Dow Jones and S&P 500 is bearish, indicating bearish momentum or fall or heavy fall or surprise fall. Okay, this is clear through the technicals. On the daily chart, S&P 500 is 70% bearish, Dow Jones is neutral, and Nasdaq is 75% bearish. Okay, so again a bearish confirmation. Okay, now technically the one more thing, there is a confirmed bearish slip in the S&P 500. Okay, So all of these factors are indicating bearishness and pressure, means a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. But because of the intraday retrace in the S&P 500 and the Nasdaq, there will be some possibility for the intraday recovery in the US stock market. Okay, now here comes the twist. Twist is that the war. So gold is around like 5,200. Okay, silver is 95. Okay, Bitcoin has given limited fall. Okay, but we are not going to consider the Bitcoin here, because Bitcoin may be considered, okay, as a safe haven, just like the gold and the Nasdaq. Okay, now because there is a war, okay, so investors are going to change the strategy, okay, because they were already buying the gold, okay, not just they, but even the central banks were buying the gold and the precious metals, okay, and this is the usual technique, okay, we are seeing for thousands of years. It is there and it will be there, okay. Whenever there is a problem, people and the institutions, they buy the gold. And so gold price are expected to move up. When the gold price moves up, okay, this everything moves up, okay, then this indicates fear in a manner that in order to push the gold price up means buying. What? Buying in the gold, silver, precious metals. Okay, now where will the money come from? The money will come from the equity market. These kind of heavy profit bookings you are seeing here, the traps you are seeing here, okay, so this was just to exit from the equity market, not the 100% capital, but some of the capital, so that this capital can be put, okay, in the gold and the ETFs. It's not ETF, but the gold, the physical, okay, the gold and the silver, etc. So the money is flowing from the equity market to the commodity market. When the money will flow out from the equity market, this means there will be natural fall. By default, there will be the fall. Okay. Now, to make the matter worse, there is the war. As such, Wall Street or the stock market has nothing to do with the war, because there are 2 or 3 or 10 countries, okay, they are at war, okay, and that's not a problem, because when there is a war, okay, then most of the time the defense stocks, okay, they rally and they go bullish. Okay, anyways, the thing is that the stock market, okay, stock market always look into the business aspect, business and the financial aspect of any event, whether it's the war or the recession, okay, or the election or whatever it is. Stock market always, Wall Street always look into the business and the financial the section or the sector only. Okay, now there was no problem as such, but now before recording this the technical analysis, okay, there came a news that Iran is going to block, it is going to block the Strait of Hormuz. Okay, what? The Strait of Hormuz. Now 20% of the crude oil, okay, is supplied through the Strait of Hormuz. Okay, because the crude oil supply will be impacted, means the oil prices will shoot up, oil prices will move up heavily. Okay, how much impact will be there? Okay, so this will be known only on Monday, okay, when the stock market comes into the session. Now, when the oil price moves up, then oil is something that drives the economy. Okay, so see, there is a cycle. Let me make it simple. Okay, oil. Now, when the oil price will move up, then it will increase the inflation. Why? Because oil is everywhere. Okay, whether it is shipping, okay, or the airplanes, aircraft, okay, or the cars, whatever is there. Okay, the movement of the goods and everything is oil, right? So when oil prices moves up, then this triggers inflation. Okay, high inflation. Well, when there is the high inflation, then the central banks have to take measures to curb the inflation. And what is the tool, okay, to curb the inflation is the interest rates. Central bank can change the interest rates. When the inflation is high, okay, then central banks raise the interest rates, and that will be the problem, because higher interest rates for the longer time means less consumption, Okay, decrease in the demands because the loans are okay, and everything, okay, it is high. Because of that, the decrease in demand, and so the economy slows down, the economic activity slows down. Okay, when it slows down, then it triggers a correction or the recession. So this is the cycle. Okay, and now this cycle is going to be triggered. Okay, why? Again, the same reason that Iran has said that it is going to close the Strait of Hormuz, means 20% of the oil supply. This is not to the United States or to one country, but the global oil supply will be heavily impacted. Okay, now there will be only 80% supply, means price are going to move up. Okay, fine. So this is the economics, this is the cycle, and in this manner, okay, this will be the financial impact. Now, how the stock market can get the relief, or when the stock market is going to get the relief? Only if there is a confirmation that the Strait of Hormuz is open and it is not closed. This means a gap down open we are expecting, okay, on Monday, or irrespective of any open and initial or intraday bearish movement. Most important part is that 1, 2 and 3 closings are above the boundary of the Ichimoku cloud. And where is the boundary of this the Ichimoku cloud? It is around 677x. Okay, now 3 closings. If somehow, let's say somehow the S&P 500 manages to close, let's say even if there comes a gap down open, then also it manages to close above the boundary of the Ichimoku cloud. So a gap down or gap up is not confirmed, but there will be the fall. This is confirmed. Okay, why? Primarily because of the closing below my level and the formation of the bearish slip. If somehow there comes an intraday recovery, okay, maybe because of some news or so, but what matters is the closing above the Ichimoku cloud. Once there comes a closing above the Ichimoku cloud, and also my level that is there in the 677x. Okay, there will be then 4 closings. This will support the bulls. What? It will support the bulls in a manner that S&P 500 can try to move up a little. What about 7,000? Will the 7,000 happen? No. 7,000 will not happen. Why the 7,000 will not happen? Okay, for that, let me show you why the 7,000 will not happen. Okay, once again, let's see the candle formed on 25th of February. Okay, open equal to low condition was there. High was 6952. Okay, 6952. There were chances on Wednesday 25th of February when it was manipulated and it sustained in that condition and it formed a trap. Then there were some limited chances on Thursday 26th of February. Okay, that the S&P 500 may try for the 7,000. Okay, or at least near to the 7,000. Okay, but it failed and we have seen profit booking. Okay, then again a failure. This means that even if there comes the bullish movement or the bullishness, then also that will be limited and we will see the fall. This is further confirmed through the bearish crossover of the moving averages. One thing that can disallow, or no, not disallow, okay, nothing will disallow. One thing that can delay the fall or help the S&P 500 to move up is the MACD of the S&P 500 itself. If there comes a good bullish candle, chances are not good, but if somehow there comes a good bullish candle on Monday, okay, and it manages to sustain and forms a bullish slip in the MACD and it doesn't change until Wednesday, okay, in that case there will be some chances that the S&P 500 can sustain bullish, but still 7,000 is not guaranteed. Okay, not guaranteed, not confirmed. Chances for the 7,000 are now limited and restricted. Okay, so what will happen in the bull side means if it moves up, then to what level? Okay, it can move up in the bull side. Again, 691x. The zone in the 691x, repeatedly I mentioned, even when then this was the profit booking on 26th of February. Okay, then also I mentioned the same, that the bullish side will remain limited to the 691x zone. Okay, only the 691x zone, and exactly the same I have mentioned on Friday on 27th of February, that if somehow chances were not good, okay, there were very limited chances if the Dow Jones will come out of the open equal to high condition. Okay, this is what we knew. But however, somehow, let's say manipulation or something, if Dow Jones comes out of the open equal to high condition, then there will be heavy bullish push in the S&P 500. But this bullish push will still be restricted to the 691x no matter what. Okay, so even in the manipulated case, even in the manipulation, 691x will be restricted. This is what I mentioned here. Okay, so 691x. Now let's say if all goes well. This is a hypothetical situation. Let's say if all goes well and somehow, okay, and the US says that the Strait of Hormuz will remain open, okay, and the war is over within 2 or 3 days, okay, and then everything is good, and S&P 500 starts to move up, okay, and somehow there comes the closings, daily closings, at least 2 consecutive daily closings above 691x. Then what will happen? Then in the bullish side, it can move at most to the 695x. That's it. Okay, that's it. Even in that case also, that's it. Okay, why? Because initially we are expecting a drop. When there will be the drop, S&P 500 is expected to either to remain within the 6,800 or to come down to the 7,100. Then whatever the recovery will be there, the recovery will be from 6,700 or 6,800. That is why the bullish side will remain limited and restricted. Okay, and also considering all of the cases and all, there are good chances that on Monday, okay, the S&P 500 can close below within the Ichimoku cloud. Okay, but what we are waiting for actually, we are actually waiting for 2 consecutive daily closings within the Ichimoku cloud to trigger the heavy fall. Okay, once there comes 2 consecutive daily closings within the Ichimoku cloud, then S&P 500 will come down to the lower boundary of the cloud. Okay, lower boundary is where this is in the 6,700. Okay, and my level is 674x. The fall will be there, will be handled at around my level 674x. And there is one more case. We might need not to wait for 2 consecutive daily closings within the Ichimoku cloud. We will be waiting for just for 1 daily closings below the Ichimoku cloud of the Nasdaq. What? Nasdaq. And on Monday, if there comes a good fall, there comes no bullish supportive pattern, then the MACD of the Nasdaq, their heavy fall, then the MACD of the Nasdaq will also turn bearish. Once the MACD turns bearish, okay, then there is nothing. Then there are no technicals which are going to save the S&P 500 or the Nasdaq. Okay. Now there is one more thing. This is, yes, the same, and yes, the one closing below the Ichimoku cloud for the Nasdaq, and one closing inside the Ichimoku cloud of the Dow Jones, and one closing inside the Ichimoku cloud of the S&P 500. Okay, so just 1 and 1, 1 and 1. Okay, this will fulfill the bearish condition. Okay, still there will be some doubt. Then we will wait for Tuesday. Okay. And again, there comes the same condition, 1, 1, 1. Okay, 100% confirmed bearish movement. There's a problem for the bears. Okay, there will be a problem for the bears only and only if there comes a special pattern. Okay, historically we have seen that this pattern has the power and the momentum and to override, okay, that other technicals and to trigger bullishness. Okay, but for that pattern to happen, once there comes a good fall, then there must come a heavy intraday recovery. Okay, and then also, and even if the 1, 1, 1 condition is there, then also it will be in a condition to trigger the bullishness. Okay, so as early as like first hour, when the first hourly candle will form on Monday, then in my first update, okay, I will confirm the pattern. Okay, whether this pattern is expected to form in the S&P 500 or not. Because if the pattern forms, then we will see one day, at least 1 day of bullishness. That bullishness will be there on Tuesday. Okay, so there may be a gap up open, okay, or that the bullishness will be there. Technically, that will be a technical condition. Okay, so that I will mention there. Now, so bearishness. So in terms of the bearishness, so other than the pattern, that the 1, 1, 1 condition, now other than that condition, okay, in the bearish side. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now that bearish condition in the S&P 500 is the 6,800. Okay. My level is 682x. Okay. Now S&P 500, it was since 17th of February. 1, 2, 3, 4, 5, 6, 7, 8. There are 8 candles. Again and again S&P 500 has come down, but it has not tested and has not breached the 6,800 psychological mark. Okay. Now, other than that, the S&P 500 has not given any closing below my calculated level 682x. All of the closings, even though there was the breach of 682x, but we knew that it will be able to recover. Okay. All of the closings in last 8 days, not just 8 days, these are 15 days from 6th of February. All of the closings, okay, are above the 682x level. All of the daily closings. Okay, even though it has breached the 6,800 on 13th of February and 17th of February, but the closings were still above the 682x. Okay, so we need a closing, even if there comes no breach of 6,800, but there must come a closing below 6,802x, 682x level. Once there comes a confirmed closing below the 682x level, then this means that the S&P 500 is weak. And is very weak in a manner that it has now come into the condition to exit into the bearish side of the Ichimoku cloud, and the fall will be there to the 674x. Okay, though 674x will handle the fall, okay, for some time, but we need then, so there will be a fall to the 674x. Fine. Okay. More and heavy fall will happen when the S&P 500 starts to give closings below 674x. Remember, one closing is not sufficient to trigger this heavy fall. We need 2 consecutive closing. If you have subscribed to my YouTube channel for last many months or years, then I always emphasize on 2 consecutive closings. There must come 2 consecutive closings below 682x. Daily closings I am talking about. Below 682x. So that there is a confirmation that there will be a fall to the 674x. Then exactly the same will be repeated at the 674x. Once that happens, then the fall will be to the 6,600 range, and in the 6,600 the fall will be handled, because there is a very heavy support zone, very heavy support cushion in the 6,600. S&P 500 will be able to handle the fall in the 6,600. Okay. However, if the S&P 500 remains bearish Monday, Tuesday, and Wednesday, okay, and it is testing the 6,600 zone, that is in the 6,600, 5x or 6x, okay, in the 6,600 range, it has come down to this, the range before buy or before Wednesday. Okay, then because this support zone has the potential to hold the fall for 1 to 2 days, then it will come into the condition that after holding for Wednesday or Thursday, okay, if the S&P 500 fails to regain the 6,700 psychological mark, okay, or the 674x, okay, then there will be more fall. This more fall will then be to the 6,500. S&P 500 will be back into the 6,500 within 1 week. The fall from the current closing will be somewhere around the 6,500. You can say like 5% fall, for 4% to 5% fall. Okay, 4% to 5% fall in the S&P 500. And if you're thinking that we have not seen, such a heavy fall, then no, it's not true. We have seen up to 5% fall within a day. Okay, many a times. However, these are exceptional. These are exceptions or the exceptional conditions when we see 4 to 5% fall. within a day. Whenever this happens, this indicates heavy bearishness, and that the change, okay, short-term bearish cycle, okay, or this the correction, that the change, okay, 4 to 5%, it is fairly possible, 100% possible happens, not a problem. However, S&P 500 cannot fall, cannot come down, okay, or will remain sustainable even if there comes a fall, as long as the Dow Jones is holding and is not losing. This is the low of this candle. Okay, this is a special candle because this candle was in the open equal to high condition, and the low of the candle Dow Jones has not breached, and it's been almost more than 1.5 months. Okay, the low of the candle was 48428.13, yes, dot 13. This is the low of the candle. Okay, as long as Dow Jones is holding, okay, and even if there comes a breach, not a problem, even if there comes a breach, but the closing is above the 48,428, okay, the Dow Jones, the S&P 500, the Nasdaq will remain sustainable. I'm not saying that it will recover, it will go bullish. No, it can actually sustain. And if continuously there are these the daily closings above the 48,428, in that case we can see again some recovery, okay, bullish recovery. Okay, on the daily chart we can see the bullish recovery to what? To the moving averages. Now the Dow Jones is coming into the condition, okay, if you see the moving averages, if there comes a good fall or a good bearish candle on Monday, moving averages will give a confirmed bearish crossover in the Dow Jones. This was the only thing that was pending. Okay, so see, there were two things. First one was the MACD on the weekly chart of the Dow Jones. This was pending. Now this is bearish. Fine. Okay, so one condition is fulfilled. The second condition is the bearish crossover in the moving averages on the daily chart of the Dow Jones. When this happens, okay, then everything is bearish. Everything is bearish because by default bearish moving averages are there, bearish, all of the technicals are bearish. Nasdaq is already leading the bearish cycle. Okay, Nasdaq will further follow the cycle. Okay, where the Nasdaq will be coming down to the 24,000. Okay, as I mentioned earlier, it will be coming down to 24,000. Okay, that is the mark. This is where the Nasdaq will find the support or the heavy support, because this is a psychological level. Okay, other than that, the moving average is also around there, the 24,000 mark. Okay, so if I'm saying that 4 to 5% fall in the S&P 500, okay, this means that 5% to 7% fall in the Nasdaq within one day is allowed and is technically permitted. Okay, not a problem. So if I say like 5%, Nasdaq doesn't need that the 5% for the 24,000 to happen. Only 3%, 4% fall is required. That is more than sufficient. Easily it can achieve 24,000 within a day, so that's not a problem. Okay, so for now, okay, for the bullish movement to happen, the only thing is that there must come a pattern, a bullish supportive pattern, okay, must come on Monday. It must happen on Monday. If there is no bullish supportive pattern, no bullishness, just the fall, continuation of the fall. Okay, when we will get the confirmation for the bullish supportive pattern? When the first hourly candle forms. So in my first update to my Patreon community members, in my first update, okay, once the first hourly candle forms at 10:30 a.m. Eastern time on Monday, I will confirm whether the bullish supportive pattern is there or not. So guys, just like this, the recent traps and the profit booking, okay, these are the turbulent times, okay, and this is not going to stop. We are going to see this more and more. Why? Okay, again, there is a fear of AI bubble, okay, AI bubble burst. Okay, how it can be prevented? It can be prevented only by giving limited bearish side movement and to keep the stock market in the bull side, or if not, then in the consolidation. Okay, means range bound, because once the S&P 500, okay, means through the technicals, okay, how we will come to know if the AI bubble has it has burst. Okay, we will get to know only through the technicals. When the S&P 500 comes into a long-term bearish cycle, Dow Jones and Nasdaq comes into the long-term bearish cycle, okay, loses the key levels, and S&P 500 has lost a minimum of 10%. Okay, Even if the S&P 500 has lost the 10%, but Dow Jones has not lost the 10%, then also the AI bubble, okay, it will not burst, okay. But once the Dow Jones has also lost the 10%, then the correction will not be there, then most likely the recession will be there, okay, because in that case this will trigger heavy selling in the entire US stock market and the global stock market, and then along with all other conditions the AI bubble will burst, okay. When the bubble bursts, then 50 to 60% fall during the recession. However, the good thing is that through the numbers, through the levels, okay, through the patterns, okay, we know what is happening, what will happen, okay, whether there is a trap, okay, or not, and when there will be the profit booking, what will be the conditions for the profit booking, what will be the levels or the zones, okay. So it's like it is very similar to what I mentioned here, okay. The Dow Jones also, that between 50,000 and 50,500 Dow Jones will make its all-time high, and it will fall 100%, it will fall, okay. There is no question that if it will sustain, there is no question, it will fall. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. So guys, if you have liked this S&P 500 video technical analysis, then please hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, okay, pre-market analysis, first update, midday update, final update, special updates, stock market opportunities in the premium stocks, okay. In order to get all of these, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.